Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Tilray Brands, ticker symbol TLRY. And so here I am recording this on Wednesday, July 3rd, after the market has closed before the holiday, and Tilray closed at a price of $1.73, being up nearly 5% on the day. So looking pretty good from that respect. But I did want to go over the chart because it has been hanging around, the 170 down to 160 range. And yeah, it hasn't hit the level that I was hoping it would hit. I do have an order at $1.60 that I was hoping would be filled. It has not yet because the low that we've most recently seen was hit on June 25th, and that was $1.61. And so the reason why I was thinking price might be coming down to $1.60 is because that was the low hit on March 7th. And let's see, also on March 14th, that being Pi Day. And then so the following day after that, on the 15th, the low was 161. And so, yeah, I was just kind of wondering if we might be hitting like a double bottom, forming a bottom around there. I had been keeping my eye on $1.70, as that did seem like a pretty notable level for us to be holding. If we do take a step back, we did, form a bottom over here. This is right around the end of October, beginning of November 2023, with a few days trading below 170, but for the most part, that's serving as a bottom. And then here, that being, an approximate bottom coming down to 160 before this massive move to the upside, which represented a swing of about 86%. And so now, we are trading right around that range. And so I am really just wondering if a bottom is in, or if we're going to break this purple uptrend that is based on these two pivot points, one being the low over here of $1.50. So, I guess we should also put that on the table if we do break below 160. And that does seem to correspond pretty nicely with the 786 over here from this Fibonacci extension that I've drawn up here, coming from the high here down to the low and then back up to this high. And so, 150 could be on the table if we break 160, but thus far it looks like we have held it. We have held this purple uptrend, even though we got just, a couple days trading below it. Other than that, we have respected it. And if we look at the past, when we have broken below levels like over here, just for a couple days, move up, consolidate, and then continue higher. So maybe we are in that kind of scenario right now. And then there are some other levels that I did want to point out. It does look like we potentially, or did, get rejected from two of them, one of those being this white uptrend and the other being this orange uptrend. So if I take a step back, I can show you that the white uptrend is based on the low from 160 over here, hit on Pi Day, and then also the low hit over here on April 22nd, that low being 165. And so we did break that level. We did get some dips below it. So hopefully those were dip buying opportunities. But as you notice, the candle for today did close below that level, which would be at a price of right around $1.75, having closed a couple cents below that. And the high for the day was 179, and it looks like probably right about 178 corresponds with that orange uptrend, which I feel like is a little bit more hand wavy than the white uptrend that is based on actually, we did break below it over here. We have broken below it multiple times, but the pivot points for that orange uptrend do look pretty notable to me. One being that, $1.50 low hit on June 21st, and then these lows over here hit on November 13th of 2023. And so that low was $1.61. But then, looking over at the chart over here, we can see that we definitely got rejected there. And so one thing that I'm a little bit concerned about is we have seen, all these down moves here, and now we're consolidating to this side. And so that makes me think it may eventually be breaking to the downside if this is bearish consolidation or a bear flag. But, I'm also wondering, are there signs that this is a bottom? We, initially got rejected from these two levels, but we did break above 170. We did close above 170, and that also does correspond with the 618 at right around 170, which is based on this Fibonacci extension, as I had pointed out before, coming from the high here of 297 down to this low hit on April 22nd of $1.65, and then up to this high hit on April 30th at a price of $2.51.5. So that is how you get that 618, which also corresponds with $1.70, that line that I had drawn, as it has seemed to be significant in the past. But so looking at the chart here, looking at the pattern here, I had mentioned, the down move followed by consolidation, so that seems a little concerning. But we also did get a bounce, really a double bottom here, followed by an up move and consolidation. So I'm wondering if this is actually a bull flag, bullish consolidation. And, while it is a little bit sloppy, we do have this big green candle here going up 2.37% on June 27th. We also have another big green candle here for the day today, July 3rd, going up about 4.85% relative to that previous day's close. So, here it's only 2.37% because we came down, opened lower than the previous day before moving higher. But anyways, with these big green candles, we do have, red candles or down moves other than, this one going up. So I'm kind of wondering if that is a rising three methods. It's very sloppy because you would expect these to be kind of stair-step candles coming down between them and then this reversal pattern. But, regardless of what happened between these, we did see price start up and then end down, and then we did get a reversal. So I do think it does still have the same kind of effect as a rising three methods, which would suggest a continuation to the upside. But again, we did get rejected from these levels. But looking at this chart zoomed in here, we did get a lot of volume, almost 17 million shares traded on the day today, July 3rd, which was a short day. So, while it doesn't stand out as being, higher than the trading that we saw on June 12th, which was actually, this gravestone doji before a continuation to the downside. But, this was like a half a day of trading. So seeing that much volume, I think that's actually a pretty good sign, even though, like I said, we got rejected from these levels. So what I would look for in the coming days is a close on Friday above 175. If not, a close above 178. That could be, or really 179. This is an uptrending level, and so I guess I should say 176 maybe to get above that white one. So we want to be seeing price reclaiming these levels, not closing below them, but also we can look at the high from June 27th. That was at a price of $1.74. We couldn't close above that level. We haven't gotten any closes above 174. Since, back here on June 13th, we closed at a price of 175. So it's been quite some time down here. We need to see us closing above, reclaiming those levels. So 174 would be reclaiming this high here. And then the high from today was 179. We want to be seeing closes above that. So if we see a close at or above 180, either on Friday or Monday next week, maybe Tuesday, I think that would be really good. Not only would that be putting in a higher close than we've seen in quite some time, that would also be reclaiming these two uptrends, and I think that would be positioning Tilray for the bottom to be in here with a lot of upside, getting back to $2.51, or getting back to filling this gap here at $2.59, as the closing price on April 8th was $2.59, and that gap has not yet been filled because the high here after this almost 40% move on April 30th was $2.51.5. So just about 7 cents higher, and that gap would have been filled. I do think that is on the table, maybe for the month of July, but it also might just be kind of stair-stepping our way up. to getting to that level. Sustainable moves to the upside rather than violent ones that we then get pullbacks on and then we actually return to lower levels. And regarding sustainable moves to the upside, I also wanted to switch over to the 1 hour time frame so we can look at the price action for the day moving into the after hours on July 3rd. It does look like we got this massive move in the early part of trading today, going up about 5.48% here on this 1 hour candle, getting rejected from that white uptrend, but then making an attempt to go higher, hitting a high of 179 the following hour before getting rejected, and we are now consolidating to the side. So what this looks like to me is potentially a bull flag with this big move to the upside, consolidation here, although it is a little bit concerning. We did get this wick up and a pullback, so maybe it's a bear flag, but since we did see a lot of volume here to the upside, that volume calmed down. I think that this is a bull flag, and we will be seeing a break above that white uptrend, getting above 175, and ideally closing the week on Friday at or above 180. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.